Hello, my name is Steve Bigelow with the Candlestick Forum. We have an extremely effective trend indicator when you use it in conjunction with candlestick signals. And that's basically the T line. The T line acts like a natural support and resistance level of human nature. It allows you to see when a trend has reversed, when a trend has not reversed, and that's where we are right now. Over the past few trading days, we saw that the Dow, being up in the overbought area, did a hanging man, a shooting star, a doji, and now opened lower, opened right on the T line. The reason this is so relevant is nobody has the T line on their charts. So it's not like everybody's watching and saying, oh, it opened right at that level. Nobody has it on the chart, and when they trade right at that level, it's further illustration that the T line acts like a natural support and resistance of human nature. We use that very effectively when you're analyzing what the candlestick charts are telling you. So as we saw today, the Dow gapped down, opened right on the T line, and then for the rest of the day or close the day above the T line. What's that tell us about our uptrend? The probabilities are we're still in an uptrend until we see candlestick signals and a close below the T line. Same scenario on the NASDAQ. There's another caveat to the T line, which is the further away you move from the T line, the higher the probability it's going to come back and test it. Knowing that, we could see there was probably consolidation back to the T line area. And today the NASDAQ did the same thing, opened lower and then closed back up above the T line. So where most people will look and say, oh, the NASDAQ was down today, a candlestick investor can see that it was still buying going on, but they haven't changed the trend. This allows you to use signals in conjunction with the T line. If you see a strong signal like the kicker signal, our recommendation on Moderna was based upon a kicker signal and a close above the T line. What was our confirmation? The next day they were continuing to buy, which confirmed the signal and told you the T line was now going to act as support. Even on bad hair days, when they gapped it way down, notice what they couldn't do. They couldn't close below the T line. Still in an uptrend. Our same recommendation analysis was on here, the T-line rule. Kicker signal, gap up above the T-line. Even today, when it opened lower, when it eventually closed back up above the T-line, it told us the uptrend was still in progress. Notice yesterday when they sold it off, where they bounced it, right smack dab on the T-line. Again, not a target that everybody's watching because nobody has this on their charts. It just illustrates once more that the T-line acts like a natural support and resistance of human nature. So this allows us to analyze which sectors or which stocks are acting the strongest. A kicker signal with a gap up and then another gap up. Sedge has been moving in the right direction. And when you see that happening in other stocks in the sector, notice SPWR did a bullish flutter kicker signal and gapped up again. We're re-recommending or reinstituting a buy because notice what happened. They bounced off the 50, J-hook type pattern. Wave 3 should now be in progress. What was our additional confirmation that they're still buying? Because they're still buying the whole sector. They're not backing off. But the same scenario can be true or used on the downside. What's another indicator of the direction of the markets? Usually it's the biggies either being bought or sold. You can see Tesla. When it bounced, it came right smack dab to the T-line, rolled over with your doji best friend gap down, telling you the T-line was acting as resistance. If this opens lower tomorrow, what's it showing us? That we've got a bearish doji sandwich, which implies more downside. And if it implies more downside, it implies wave 1, wave 2, wave 3 continuing on this bearish J-hook pattern. Same scenario on Amazon. Anytime you see a close below the T-line, the probabilities are dramatically improved that your downside is in progress. Same scenario on the upside. See a close above the T-line, there's going to be more upside. So if Amazon opens lower tomorrow, wave 1, wave 2, look for wave 3 to be the same magnitude as wave 1. Net, same scenario, bearish kicker signal, right at an obvious level that everybody else is watching. What's happening at the 50-day moving average? It's not that they're watching. This is where they're making their decisions. We can see very clearly using candlestick signals what their decision was. Very bearish. Now, a bearish kicker signal followed by a gap down, and not only a gap down, but a gap down to the T-line and trading lower. What's the implication? There's very strong selling pressure. Here becomes our next target. You can be buying puts or put spreads or shorting the stock, knowing you have a high probability trade in that direction. So the T-line is extremely effective for telling you when there's a major change of investor sentiment. PEGY, gap up through the T-line, bounced up off the T-line, bounced up off the T-line. What's our trading strategy at this point? You can be buying this one on positive trading because notice what this gap up told you. This downtrend that had been resisting at the T-line is now breached. Now you have more upside potential. Anytime you see a close above the T-line, the probabilities are you're heading in a bullish direction. Notice our recommendation a few weeks ago on ATNM was based upon a McMuffin, a Morningstar signal followed by a doji sandwich that closed above the T-line. Told us very simply that if this opened positive the next day, we could be buying. And the rhetorical question always is, do we get huge moves like this using candlestick buy signals? Definitely not. But you're put into positions where the probabilities of participating in these type of moves are dramatically in your favor. So that's our recommendation also on HLIT, a bullish harami right at the 50-day moving average. Now we've got a little left-right combo, close above the T-line. If this trades positive, what's our probabilities? We're heading higher, and maybe with the same magnitude as wave 1, wave 2, right back to an area everybody else is watching, going into wave 3. Again, the T-line in conjunction with candlestick signals dramatically improve the probabilities of being in the right trade at the right time. So you might want to join us this coming Saturday, or 2 days from now. We do a full day training illustrating the signals and patterns and how they're dramatically improved as far as probabilities of being in the right trade using the T-line in conjunction with that analysis. Come join us. You'll get a heck of a lot more information than you expect. They're scheduled for 10 a.m. to 2 in the afternoon, but you'll be lucky if you get out before 4 or 4:30. We've got a lot of information to put out. That'll be it. We'll see you in the chat rooms.